Alright, guys, we are now officially in an economic war. The US has launched a tariff regime on the world, and China has officially hit back. And Beijing is deadly serious about this counter strike. In fact, I would say they have gone all out and they are ready to escalate all the way to the bitter end. And if you think the market collapse was bad, everything's about to go ballistic. Now, China's strategy of bidding their time is over, and they have done a show hand at the poker table. The Chinese government has imposed a brutal tariff hit back on the United States. Starting on April the 10th, China will impose a 34% tariff on US goods to match Trump's tariff war. Now, the Staff The Apprentice has now met the crouching tiger and hidden dragon. It's rush hour for Trump and is 1,000 times worse than facing down Jackie Chan. Understand why China has chosen to hit back so hard. The first reason, of course, is political. President Xi just can't sit back and do nothing. Trump's trade war will hurt Chinese exports to a certain degree. It will also look like China is too afraid to react. This is unacceptable if Beijing wants to extend their economic reach and influence around the world. Non-action will look weak to BRICS and other trading partners like Latin America. Now, we thought that China would focus more on stimulating their economy, but it seems they are very confident in hitting back on Trump's economy while growing their own domestic demand. We are now in full emergency mode, and if you're waiting for a full economic war, we are one step away from the end. Welcome to day X. In addition to the 34% tariff hit back, China has also imposed more punishments. They are now restricting exports of 7 types of rare earths. That's in addition to the critical mineral ban that's already in effect. China is also going to add 11 US defense companies to a blacklist, which means they can probably kiss goodbye to their Chinese supply chains. Any inputs they need might get banned really soon. Now, China also imposed export controls on 16 US firms. They won't be able to export their goods into China. Now, the companies are essentially cut away from the Chinese consumer market. This is obviously a warning shot to other big US companies. You better lobby the US government to stop this trade war, and if you don't, we could block all your exports coming into China, not just a 34% tariff. Beijing is essentially making the ultimate gamble. We bet that you need us more than we need you. You will flinch first. And if you're in US assets, this is a nightmare for you. The S&P is down by over 15% now. US tech giants have officially entered a bear market as well. All the big names like Nvidia, Microsoft, and Apple, they have crashed into the underworld. The Magnificent Seven are down by 35% from their peaks, and China's full retaliation is only going to make things worse. Who needs who more? This is the trillion-dollar question. Trump believes that the US economy is indispensable, but that's not really true, especially when it comes to manufactured goods. By imposing a 34% tariff on Chinese goods, Trump is already going to squeeze the budgets of hardworking Americans. They will have to spend more to get less, and in a worst case scenario, they will simply stop buying domestic goods. China's retaliation is now going to put pressure on the revenue side of American companies. That's why the markets are selling down aggressively. Investors are pricing in an earnings collapse because many companies are exposed to Chinese demand. In 2024, China imported over $160 billion from the United States. While that's 3 times less than US imports from China, there is a qualitative difference here. A 34% tariff on US goods will make Chinese consumers shift their spending habits. Instead of buying US goods, they will shift consumption to other imports or buy their own local products. They won't go without. But US supply chains are still fractured and will take years to build out. Trump's tariff on Chinese goods will jack prices higher. Consumers do have to either pay more for the item or make do without it. Either way, their standard of living will drop. Now, take agriculture for example. China doesn't need US food imports. Beijing isn't desperate for US soybeans, wheat, or dairy. They can grow their own or just import more from Russia or Brazil. For certain US industries like aviation, this will simply destroy their revenues. Boeing might suffer a big revenue crash and they will lose the biggest buyer of planes in the world. Through 2042, China will account for 20% of global airplane demand. And if this continues, do you think Beijing will buy more 747s for their fleet? They will simply buy from the French company Airbus and start wrapping up their own domestic production through Comac. Boeing is going to lose out on future Chinese demand of over 8,500 new commercial planes. Trump has done a big miscalculation. He might be the president of the United States, but he's not the king of the world. And China's retaliation is a reminder of how bad things can really get. Here's the problem: the US has warned the world not to retaliate or Trump will up the stakes, and Beijing has pushed the US to the corner. If Scott Bessent doesn't retaliate, it would mean that the US has lost the confrontation. So who will flinch first?
One of the messages that I'd like to get out tonight is everybody sit back, take a deep breath, don't immediately retaliate. Let's see where this goes, because if you retaliate, that's how we get escalation.
And then it becomes a full-fledged trade war, in your view?
Not a trade war, depends on the country. But remember that the history of trade is we are the deficit country. The deficit country has an advantage. They are the surplus countries. The surplus countries traditionally always lose any kind of a trade escalation.
Trump has sandwiched the US into a lose-lose situation. Should they retaliate against China or not? And what comes next after a 34% tariff? Will it be a 500% tariff next? Why not ban all Nvidia chips or throw US dollar sanctions as well? We are now in very dangerous territory, and China's hit back is putting tremendous pressure on US industries. China's rare earths export restrictions is wrapping up the pain even further. We now have 7 categories of medium and heavy rare earth exports to be throttled. These include samarium, terbium, and lutetium. Trump wants to revive US manufacturing to make it the export hub of the world. Well, that plan is going up in flames. China's previous ban of gallium and germanium targeted US semiconductors. Making chips domestically will be much more expensive, and this makes it harder for companies like TSMC to reshore production back to the US. Their cost of production is going to rise. Even if the dollar falls by 5 or 10%, that won't matter if your input cost flies to the moon. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned 2 things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. And China's new restrictions is going to hit multiple industries all at once. Samarium will hit America's defense complex, making it harder to create magnets and laser materials to make weapons. Dysprosium will target US green energy industries. Making magnets for electric vehicles and wind turbines is now harder. And for scandium, US aerospace companies will get clobbered. Manufacturing lightweight aluminum alloys will get even more expensive. And going down the list, many other industries from medical to electronics are also impacted. So China's hitback is severe, and Beijing announced it on a holiday, so they aren't taking any breaks during this trade war. And here's the bottom line: these export curbs are going to drive the cost of manufacturing up in the US. And together with Trump's own tariffs, prices will fly up for companies and consumers. But what will Trump do? If he doesn't retaliate, his strongman persona will crumble in real time. However, if it does, China still has more cards to play beyond just the import tariffs or export bans. And you guessed it, China could very well accelerate their US asset dump. Chinese investors and their central banks, they still hold a ton of dollar-denominated assets, and the market is afraid of a big sell-off. US treasuries are now at risk of a foreign buyer strike in retaliation. And this is just the base case. Of course, countries will shy away from buying US bonds. Would you buy US debt and fund the country that's trying to punish you? Does funding your own economic containment make sense? China has already blocked investment into US companies, and the next step is to start dumping whatever US Treasury bonds they have left. Foreign debt holdings are already a very big problem for the Trump administration. The two biggest buyers of US bonds, China and Japan, they are actively reducing their positions, and the big dump came in 2022. China's holdings dropped by over a quarter trillion dollars worth, but they still have over $700 billion left to sell off. How is this good for the US? It isn't. It could trigger a global sell off. Other countries that are pissed off with the US could always copy China and dump theirs as well. A big concern is the trend of foreign holdings. In 2012, over 50% of outstanding treasuries were held by them, but this has declined to nearly 30% today, and the world just needed an excuse to unwind even more. I think Trump's trade war just gave the world a bigger reason to sell. We can fully expect China to dump more USD assets in the coming weeks and months. And on a technical level, now is the time to start selling off your US bonds. Whether you're an investor or central bank, no one wants to sell their assets at a loss. And thanks to the trade war, we are on the brink of a recession. And because of this, there's a flight to safety and people, they are rushing to buy US treasuries. The US 10-year yield has dropped below 4% for the first time since Trump won. The deeper the economic panic, the more investors will pile in and drive yields down. Remember the inverse relationship between yield and price. A falling yield means the bond price goes up. So if China starts selling now, they will lose less and might even come out ahead. In fact, we could see interest rates just plummet over the next few months. The US bond market is working to China's advantage, especially if they want to sell. Market estimates are starting to price in multiple rate cuts. Just a month ago, we were debating if we would get even a single cut, but now everyone out there expects the Federal Reserve to step in and slam the rates down. By October this year, traders believe Powell will cut interest rates by 75 points, which means bond prices are expected to climb higher. And if China is going to dump, it will probably be during this period. Now, whether Trump retaliates or not, we are not going back to the old world order. Globalization is done, and it will be a cold winter in hell before China works with the US again in almost anything. We can take the idea of global trade and just toss it into the bin, and let's not be naive here. The US is going full protectionist. They are going to ring fence their economy from China, and Beijing is going to do the same thing as well.
I think it's useful for all of us to step back and ask ourselves, what has the globalist economy gotten the United States of America? And the answer is fundamentally it's based on two principles: incurring a huge amount of debt to buy things that other countries make for us. And to make it a little bit more crystal clear, we borrow money from Chinese peasants to buy the things those Chinese peasants manufacture. That is not a recipe for economic prosperity. It's not a recipe for low prices, and it's not a recipe for good jobs in the United States of America.
But this is a big gamble by the US, and China just called their bluff. Will the US up the ante? Will they call or fold their hand? Something tells me that Trump will probably escalate back. Now, how bad can things get? Well, get this new revised estimate. JP Morgan has increased their global recession odds to 60%, and the markets are continuing to collapse. And this is the worst sell-off, single-day sell-off since the 2020 pandemic, and it's not going to stop. Now, I have no idea how far the bottom is. We are at the start of total decoupling between China and the US. So brace for impact, guys. The collision is going to get really nasty. But as always, let me know what you think. Will Trump hit back on China? And what's next? 1,000% tariff on Beijing? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.